Welcome, everyone, to our webinar, How to Keep Business and Personal Credit Separate. I'm Gerri Detweiler, and in this presentation, I want to share with you both some why and some how, so you can effectively separate your business and personal credit over time. And I'm also going to talk about a few myths that I hear sometimes from business owners. One of the biggest myths I hear is that you can just build business credit and get tons of financing in the name of your business only. And while this does happen, it typically happens after businesses reach specific milestones. Many businesses find that they still rely on a combination of business and personal credit to get financing and grow their business. So, this is research from the Federal Reserve. They survey small businesses with 1 to 499 employees, and in their 2020 Small Business Credit Survey, they found that 12% of business owners surveyed said they only used business credit to get financing. 40% only used their personal credit, and 48% used a combination of business and personal credit to get financing. So we want to move in the direction of separating personal and business credit as much as possible, but there are steps that are going to happen in between for most business owners. Now, if you're not familiar with it, there are major commercial and consumer credit reporting agencies. And as you see from this, there's a little bit of overlap. On the consumer side, you have Equifax, Experian, and TransUnion. There are other bureaus, but those are the uh, big three credit bureaus for consumer credit information. On the business side, I'd probably put Dun& and Bradstreet, Equifax, and Experian in those top categories. There's also the Small Business Financial Exchange, which collects data that can go into these reports, and there are other bureaus like Credit Safe. But one thing I want to make clear is that these are completely separate. So even when you see Equifax on both sides of this, on the personal credit and the business credit side, or Experian on the personal and the business credit side, the actual sets of information about those businesses or the business owners are completely separate. They don't overlap and they aren't commingled. So even in a case where you have a credit score like the FICO SBSS score that can look into both the owner's personal credit data and the business credit data, it doesn't mix those credit reports. It just pulls information from each source to calculate the score. So again, there's a firewall between business and personal credit. Now, another source of confusion is personal credit versus a personal guarantee. And so you may have a situation where you, as a business owner, apply for credit in the name of your business. And even though you don't have a personal credit check, you may still agree to a personal guarantee on the personal on that side. So you may be agreeing that if you default or your business defaults on the loan and you don't pay it back, that your personal assets may be used to help repay the loan. Sometimes this is very specific. Sometimes you have to read the fine print. So I would really encourage you, when you are getting business financing, to take a look at that and see what the loan agreement says so you understand what you might be getting into. Also, there are some types of financing where a personal guarantee is just very, very common. For example, SBA loans. They're almost always, well, I can't think of an instance where they won't, except there's no personal guarantee on smaller PPP and EIDL loans, but there's no personal guarantee actually on PPP loans at all and smaller EIDL loans. But those are pretty new and recent. Otherwise, they typically require a personal guarantee. That means if you default, they can go after your personal assets to try to collect. Many of the major small business credit card issuers They may or may not report to business credit, but they still will almost always require a personal guarantee from the business owner so that if the business defaults, the owner is responsible. And it's sometimes with some of these types of financing, it's really until you move into a level where you have a larger company, significant revenues before you can negotiate away that personal guarantee. So just remember to review your loan agreement so you understand what the issuer is or the lender is requiring. Now, one of the key concepts of separating your business and your personal credit is that you need a business entity. The majority of small businesses in America operate as sole proprietors, and that's not a legal entity. It's just a method for running your business. Until you form a legal entity, again, LLC, S Corp, C Corp, or another legal structure, there's no difference between you and your business. There's no differentiator. They are the same thing. So it's really hard to effectively separate your business and personal finances completely without an entity. There are many reasons to do this. I also understand that in some states it can be expensive to get started. And so you may not quite be at that point, but understand that this should be a goal for your business because until you have that legal separation, you really truly don't have a separation in terms of financing completely. You don't have a separation completely between you and your business. They are essentially intertwined because there is no legal structure. Now, one of the tips we recommend at NAV to help separate your business and personal credit is to get a business credit card. And you can learn more about business credit cards at the link provided. It's also provided in your resources. So if you go to the handouts or the resources for this presentation, you're going to see a variety of things, including information about business credit cards. Now, as I mentioned just a moment ago, most of the major business credit card issuers um, do uh, do help you build business credit and may or may not impact your personal credit. And the reason this is important is because I have seen businesses that don't understand. They get a small business credit card and they don't understand that it may impact their personal credit. So let me give you a quick example. Now, there's also businesses that just make do with the credit that they have while they try to grow their business. So I'll give you a quick example. I was at a workshop where a small business advisor told me he had a client who had some financing fall through at the last minute. She ended up maxing out her credit cards, and she continued with her business. Her business did well, but the fact that many of her credit cards were maxed out really hurt her personal credit scores. About a year later, she was able to refinance into an SBA loan. And SBA loans typically don't show up on your personal credit. In fact, I don't know if they do. Unless you default, they don't show up at all. So she was able to refinance with an SBA loan and pay off those credit cards. And when she did, her personal credit scores jumped over 100 points because the debt that she was carrying on those credit cards was bringing down her credit scores. I also was on another webinar where someone reached out to me afterwards and said, I didn't know that some of these small business credit cards report to my personal credit. I checked my credit report and I didn't understand why my scores weren't better because I pay my bills on time. But I realized that small business credit card is maxed out and that was affecting my credit scores. So here, what we're talking about is something called debt usage, or you may have heard it referred to as utilization. And that's where you use a significant portion of your available credit on your credit cards. And the higher that ratio becomes, the closer you get to your limits, even on a small limit card, like a retail card with $1,000 limit. If you get up there in terms of that ratio, the balance compared to the limit, it can really bring down your credit scores. So one thing that can help here is if you use credit cards for your small business, is to use a card that won't report to personal credit unless you default. Now, if you're not going to carry balances, you don't need to worry about this. It's really for someone who might carry balances either seasonally or on a regular basis, or maybe they need to use a credit card for capital, working capital. Then you want to look at the list that we have. And again, this is in the resources as well as at nav.com/reports. This is the major credit card issuers and which ones report to personal credit. Now, on the business credit side, all of the major issuers report to at least one of the business credit reporting agencies. So you can build business credit if you pay on time on your business credit card, and you'll see that list at nav.com/business-reports. Debt utilization doesn't tend to be as a big a factor on the business credit side, although some credit scores like Experian and Telescore will look at this ratio. So you do want to be cognizant of it, but it tends to have a bigger impact generally on the personal credit side if that card reports. The other thing I'd encourage you to do to really separate your business and personal finances, and this is not going to directly impact your credit scores because bank accounts don't report to your credit reports, but it will help you separate your business and personal finances, which in turn can help you get other financing that may not rely on your personal credit or report to your personal credit. So I really would encourage you to get a business bank account and use it strictly for business income and expenses. And do this as soon as possible. Even if you are self-employed as a sole proprietor, this is still an important step for your business. Don't ignore it. It's really important. And then use it just to pay business expenses. If you need to pay a personal expense, pay yourself and then pay that expense out of your own personal accounts. Don't mix your business and personal. If you create a business entity, such as an LLC or S Corp, starting to commingle those finances could put that entity, the asset protection at risk. So you want to be careful there. If you're going to contribute funds to your business from your personal funds, talk to your accountant. They may recommend loaning the money or they may just recommend making owner contributions. Your accountant can help you decide which approach is correct. As you start this process of building your business and personal credit, you also want to really pay attention closely to what's going on with both your business and personal credit. As we mentioned, both are so important. So, one way you can do that is with a free NAV account. This will give you your Experian personal credit updated monthly. And you can also check your Dun& Bradstreet, Equifax, and Experian business credit, and that will be updated monthly. Just log in each month and you can see the updated information. We also offer paid plans, and with our paid plan at Business Boost or above, your payment that you make for that account will be reported to the major commercial credit agencies, Dun& Bradstreet, Experian, and Equifax, as a trade line. So it helps you build business credit. It's never negative because if you decide to go back to a free account, we just stop reporting it. But that may be an option for you in your business credit building journey. Either way, whichever you choose, the free or the paid plan, checking it does not affect your credit scores. But what this can do for you is help you understand what shows up on your business credit reports, because not all companies report to business credit, and it can be pretty confusing at times. So this is going to let you see what reports and what doesn't, and also monitor your personal credit to see whether those accounts that you've gotten for your business start to show up on your personal credit. And if so, then you can determine whether that's the right move for your business at this time. Now, the other thing I really would encourage you to do is to start borrowing as a business as soon as possible. Now, again, when you're brand new and you're just starting out, your business is young, it's going to have fewer options for true business financing that doesn't involve a personal credit check, doesn't involve a personal guarantee, and doesn't report to personal credit. But you have to start somewhere, and you start by building these references, paying them on time, and over time, that helps you as you grow your business to contribute to the process of effectively separating your business and personal credit. I just don't want to hype things for you, as I've seen some things online do, where they just make it sound like business credit is the secret to limitless, credit lines for your business. Just because you build business credit doesn't mean you walk into a bank and get a bank loan. You'll still need other qualifications, such as time in business, revenues, and most banks in particular love to check personal credit as well. Another thing I would encourage you to think about is getting the proper insurance for your business. Because if something does go wrong and your business is not, well, two things could happen if you don't have insurance. One is you could lose your business, it could go out of business due to a lawsuit or some other problem, some kind of cybersecurity breach that impacts your customers, etc. That could put your business out of business. And if you don't have adequate asset protection, in other words, you have a very solid business structure, you've kept it separate, you haven't signed personal guarantees, then the creditors or whoever's suing you may be able to get at your personal finances. So insurance is another layer of protection beyond just getting business credit or getting a business entity. It's another level of protection that could help you in the event something goes wrong. And we are a pretty lawsuit happy country. So having insurance can give you some definite peace of mind in this instance. All right, so let's review the action items for you as you start going through this process of really separating your business and personal credit and finances. So I would encourage you as soon as possible to establish a legal business entity and understand what you need to do to keep that entity active and in compliance and protecting your personal assets. Get a business credit card. And when you do, really understand how it's going to impact your personal credit. So if you're going to be carrying balances, a card that doesn't report to personal is probably a safer bet for your business. If you can get that going out the gate, I would recommend you do so. Get a business bank account so you can keep track of your business expenses and really help maintain that separation between business and personal. Monitor your business and personal credit. We can help you do that at NAV. And I can tell you that so many business owners don't do this and they don't understand what's happening with their business credit, or even that they may not have business credit because they're not taking steps to establish it. So make sure you're at least checking in once a month just to see where things stand, see who's reporting, and see what's available to you. Get business insurance that's appropriate for your business so that you can be protected if you are sued or if other types of disasters strike your business. And then when you have your NAV account, review your financing matches. So when you get into your NAV account, look at your financing matches and see what may be available. And to the extent possible, look for financing that will not impact your personal credit so you can truly make that separation. All right, if we have any questions, I'll answer those questions. I want to make sure that you, do have a question. Yes. Secured business credit cards. That's a great question. Unfortunately, there aren't as many secured business credit card issuers as there are in the consumer side. I don't know why. I think there's a market for it. But Wells Fargo has a secured credit card. So that may be one option that you want to check out. My understanding is you do have to go into the branch to do that. Another option that you might want to consider, though, if you're building your business credit, is to get some vendor accounts. So we have a separate presentation on trade lines, but if you go to nav.com/vendors, you will see a list of vendors that report. And then we have another question. How important is the business address with Dun& Bradstreet and the other bureaus? I've heard they don't like home addresses, P.O. Box, or resident agent addresses. Please do not feel that you have to go out and rent an office space just for your credit score. Things have changed, and many, many businesses can operate from a personal or home address. When I've talked to lenders about this, what they've told me is that they want to make sure that the address that's given makes sense for the business. So if you had a business like an auto repair shop and you just list your home address, unless you live on acreage where you can conduct that kind of business, it might not make sense. But if you have an online business or a consulting business, that would make perfect sense. And they may be fine with that. Personally, when I operated my business for well over a dozen years and had a good Dun& Bradstreet credit score, I still have my S corporation. I'm just not active in it these days. I always operated from my address that was at a PO box. So it was a service that had a PO box because I didn't want to put my personal address on my websites and on other things. And so I used that for my business address, and it worked just fine. So the question is, if we do use our home address, is it public information? Yes, it probably would be public information because you'll probably need to publish it in various places. For example, registering with your state. So that's why you may want to go ahead and get that home address or get that PO box or another, postal type address. And then what you can do is, if you're applying for credit, you can always make a note to the lender if they question it. But I don't, it's not as crucial as it used to be. It used to be something of a screen. You have to remember that one thing lenders are worried about is fraud. And the same thing goes with the credit bureaus. They're trying to identify fraud, but so many businesses now are operating from home addresses that it's not unusual for this to be the case. So again, if it makes sense for your business, I wouldn't worry about it too much. I think that generally one of the things that I see is people get so hooked on the details, how many accounts do I have? Are they tier 1, tier 2, etc. And they sort of lose the bigger picture, which is the main thing that lenders want to see is that your business is making money, it's staying in business, and that you have, good payment history. That's what they're really looking for. So all of this can help you um, to establish that history. Now, another question we have, do net 30s help build business credit? Yes, if they report. So if your vendors report or your suppliers report to the credit bureaus, they will help you build business credit. So again, nav.com/vendors is a link with companies that do report, and that may be helpful to you. And let's see, we still have time, so we're good on questions. So let's keep going. I have a business credit card and recently received a small SBA loan. Congratulations. That's excellent. What would be the next step in building business credit as a fairly new business? Well, I can think of a couple of things there. One would be to establish a vendor account or two that reports and buy things you need anyway for your business. You don't need to spend a lot of money. You can buy many of the vendors that we list on our website, you can get shipping boxes or Keurig cups or janitorial supplies, things that you need for your business anyway. And you can use the net 30 vendors to buy those things and then build that credit history. So that would be one thing. You certainly could consider a NAV Business Boost account to report another trade line to your credit. And then there are some small business lenders that you may get matched with in the NAV marketplace who also report. So that may be another option for you for building some additional references that report. One thing I want to just share with you real quick, this is more building business credit, but there are some lenders that just report to what's called the Small Business Financial Exchange. It's like a data warehouse for lenders. And so it may show up there, and then it could become part of your business credit if a lender checks your business credit, but currently you don't really have access to check your SBFE data. So we hope to help change that in the future. But in the meantime, understand that there may be accounts that are helping your credit, but they aren't necessarily showing up on the credit reports that you're getting either from the credit bureaus or through your NAV account. All right, how long does it take to generate your Paydex score, and how many accounts do you need? You need at least 2, and 3 is preferable. And we have seen business owners make significant progress very quickly. So we have actually seen business owners establish business credit much more quickly than personal credit, which is encouraging, simply because they're actively doing something. And I think that's one of the challenges. Many business owners just don't know about this. They aren't building business credit. And so they aren't seeing any results. So that's something that should be encouraging to you as you get started. Now, how should negative reporting be addressed on your business credit? If you have negative reporting, there's a couple of things you could do. One is to reach out to that lender or vendor and see if they are willing to change the terms on your account or maybe give you some kind of accommodation so that it will no longer be reported. You can also try disputing it, but just keep in mind there's not the same legal requirement on the business credit side that there is on the consumer side. On the consumer side, if you dispute something and the lender doesn't respond within to verify it, generally within 30 days, it has to be no longer reported. Uh, there's no such requirement on the business side. So they could not respond and then still continue to report it for some time. So just understand that it's a little bit different. However, what I will say is that many times lenders on the business credit side, what they're looking for is current problems that would be a red flag. So if you have resolved a collection account, tax lien, whatever it may be fine for some of these business lenders, especially if you're looking at a lender where you're going to be purchasing their goods or services. You're going to get an equipment lease from them for their product. They want to make that because they want you to buy from them and not from somebody else. Same with many vendors. So that is certainly an option that may be helpful for your businesses, just to understand that resolving those, why they don't remove them, will potentially resolve the red flag that might cause a lender to determine it and say no. All right, another question we have is, isn't it true that NAB is one of the only websites where you can get a FICO SBSS score? This score is used to pre-screen applicants for SBA programs. Yes. So there is a score called the FICO SBSS score that takes into account the personal credit data of owners, up to 5 owners, and also the business credit data of the business. And this is a score that that is encountered if you're applying for an SBA small loan, $350,000 or less, or a Community Advantage SBA loan. And it is a mandatory pre-screen. So if you don't have a high enough score, currently it's 160 out of 300, then your application gets kicked in for a manual credit review. And that could mean a denial or it could mean more time. So that is something you can purchase with a paid NAV account. Just keep in mind, like with any FICO score, there's no single FICO credit score. There's no single FICO SBSS score, but this will help you understand where you stand and give you a better idea of where you are. All right. So can you explain the types of tier accounts? For some reason, tier accounts are very, very popular in the business credit building world. I'm not as enamored with them. I think they can be helpful as a general guideline. Like, okay, you're going to start here at a tier 1, which is the easiest to get. And once you establish those and get those under your belt, then you can move up to a tier 2, which may be a more difficult one to qualify for if you don't have any business credit history. The problem I have is that sometimes I feel like people lose sight of the goal. And the goal is to get the financing your business needs to grow. The goal isn't number of accounts. It's not even really your paydex score. I mean, yes, a good paydex score is helpful to your business, but that's not the ultimate goal. It's like with personal credit. The ultimate goal isn't what your credit score is. It's that the credit score gets you what you need and what you want. So with business credit, I hope you can stay focused on the idea that the most important thing is that you think through, why am I doing this and what do I want to accomplish? And if your ultimate goal is to get, let's say you're in a business where you want to get a line of credit from a bank, then you're going to need to establish some business credit. You're also going to have to make sure that your personal credit is pretty darn good, because most banks are going to look at least a 650, 680, sometimes 700 or above. You're going to have to be able to demonstrate good revenues through your business bank account. And you're probably going to have to be in business for at least 2 years. Sometimes they'll make exceptions for certain businesses, but a lot of banks are more conservative. So what's your goal? And then you back into that goal by looking at these steps in that context. So your tier 1 are your easiest, tier 2 are going to be a little bit harder. You're going to go up that list as you start to build business credit with the ultimate goal of a business that can get financing that you need when you need it. All right, looks like we have one more question here. How do you check what's been reported so far? So I assume you mean on your business credit. So you can check your business credit again for free at NAV, Dun& Bradstreet, Equifax, and Experian. Now, one thing I'm going to warn you is that they aren't required to report the names of the creditors or the companies that are extending financing to you. So when you check your business credit, you won't see the names of those vendors or lenders. You have to be a little bit of a detective, especially if you have business accounts that are already reporting. You might have to look at the credit limit, for example, or when it was open to figure out which one is which. It's a little confusing. I noticed on my business credit reports, I've had that happen where my credit cards, I have to figure out, okay, which one is reporting to which bureau. And again, it can be a little confusing. So I do think if at all possible, the time to start looking is when you're establishing business credit, because then you can see what's reporting. And as it appears on your credit report, you can say, oh, yeah, I just opened that account. If you open 5 accounts in 1 month, it's going to be harder to track. But if you start and build up, it's going to be pretty, hopefully, pretty apparent to you which one is reporting. It can also help to see your balances, your spending that you've had on the account. That can all be helpful for you in tracking what's on your business credit. All right. Any other questions about separating your personal and your business credit that we can answer? If not, we'll wrap this one up. I hope you found it helpful. Please check out our other Bright Talk webinars, and please make sure you check out the resources that we provided so you can get establish your business and build that credit that you need and ultimately get the financing you need to successfully grow your business. Thanks for joining us today.